Hi, I'm Greg Hunter of USAWatchdog.com, and I have been invited to interview the two greats at JSMindset.com. Of course, Bill Holter, regular on USA Watchdog, and Jim Sinclair, the renowned gold expert. Actually, he's an expert in everything. Jim Sinclair and Bill Holter, thanks for inviting me in to interview you guys.
Well, it's nice to have it three-way, too, because, Greg, you're one of the smartest people around. Don't deny it.
Thanks for doing it, Greg.
Good to do it. Listen, you told me to come up with a ton of questions, and I have. And I wanted to start with all these people. And just in the last 30 days or so, I mean, just Jeff Gundlach, I think he manages $100 billion. You got Bill Gross, the bond king, who's been out a couple of times warning of explosions and supernovas in the markets. You got Carl Icahn calling into CNBC and dropping these big, you can't hold interest rates to 0%, otherwise it'll explode. These guys, just a few of them. And these guys aren't talking about a market correction or a pullback. They're talking about explosion. They're talking about supernova. Jim, I talked to a little bit about this with Bill Holter in an interview, not long ago, and I wanted to get your take on it. What is up with all these big warnings from these financial heavyweights on mainstream media?
They're preparing for what they believe. You have to understand that the men you just mentioned and probably most of the people that are interviewed talk their own positions. So it's more than a warning. They're telling you exactly what they've done. And they're not out altruistically to save the man in the street. They're out to make money in a huge short position, probably through over-the-counter derivatives. What they're perceiving is a lack of volume in price. So they see that there's a price, but they know that price is the product of the two den who trade a diamond between just two fellows. And they can trade it up and trade it up and trade it up every day until one person doesn't show up because he got the flu. And then what's the diamond worth? The answer is nothing. So they're not looking for a market to tick down. They're looking for a market to have the character of backing into an open door for an elevator without an elevator there. And their warnings are both technical and fundamental. We're in a period of time where models are starting to be quite questionable. We have a model-driven Fed. What happened to the employment level? It's starting to, when you are, if you're in a frenzy yourself as a devotee of models, it's a horror to start to see everything that you depended on for your decisions backfiring. And models can't be remade immediately, and models have no ability to function in structural changes. Now, so we have no volume, we've got fake prices, we've got the biggest money in the world short the market, we've got a Fed with no tools, and now we've got a Fed whose primary speedometer, primary barometer, primary indicator is starting to have a heart attack. So what they're basically saying is we've already done it. And we're not short the stuff that's got volume. We're short the stuff that doesn't. And when this thing comes down, it's going to be a free fall. And free fall of the type where the broken egg can't be put back together again. It will have to be remade. And when you have to remake something, it consumes time. And time is not what investors in this world allow. Everything has to be instantaneously gratified. There's no such thing as a long term except possibly from lunch to 2 o'clock. You put that all together, and you can feel very sure that what is expected to happen will happen because they're talking their positions.
Bill, could you add to this? You said something very pivotal in the interview we had, several days ago, and you had talked about what this signals in terms of closeness. How close is this event? What's your read on, if you want to extend Jim's thoughts there?
Well, the fact that you've got so many coming out in such a compressed period of time tells you it's on the immediate horizon. And I would pretty much just sum up what Jim so eloquently said is it's a reset. That's how it's going to be done. In my opinion, and I think Jim's also, is that we'll go to bed on Friday, and Monday morning the markets won't open, and whenever they do reopen, there's your reset, or the beginning of the reset. And they may try. It may take them 2, 3, 5 different tries at reopening markets.
Go
ahead.
I was just saying the experience that we saw over in China, when China's market went into a vacuum.
Let's bring up this thing with Bill Gross. I want to stay on this because you try to pick the potential trigger, and there's no bigger potential trigger than what Bill Gross brought up, these 10.4, I believe, reported 10.4 trillion. He said 10 trillion. 10.4 trillion in negative sovereign debt, negative interest-paying sovereign debt. One report that I read said it's 8 times bigger than the 1.5 trillion of subprime, 8 times bigger. Are you thinking that now the German bonds are 0% just recently? Are you guys thinking that's one of the big triggers, the negative interest rates? Also, Carl Icahn talked about how the negative rates are going to blow up the economy. They seem to be on the same page, even though they're saying different things. Talk about the negative interest rates and the warnings off of that.
Bill, you want to go?
Let me start it off, and I'll let you finish it. I know this is right in your wheelhouse. I had mentioned to Greg that negative interest rates on a sovereign bond is really an impossibility, because what that's saying is that, first off, you need to understand that bonds are discounted cash. They're discounted into the future. So negative rates mean that the debt is trading at a premium to the cash. So what it's saying is debt is better than cash. That's impossible. Now, whether it's a trigger or not, I don't know, but I certainly know that it's highly explosive. Whether it starts there or starts somewhere else, I don't know. But it's like you said, Greg, and a situation that's 8 times bigger than what subprime was. But this is sovereign debt. This is not subprime debt. This is supposed to be the cream of the crop.
Yes. Well, you know that historically, whatever starts these loss of confidence experiences is not necessarily the most popular subject in town. It could be the Bank of Bumblebutt, Arkansas, goes broke. But putting that aside, let's start thinking about the subject as the biggest bubble that has ever existed, that makes tulips look like nothing, or the South Sea bubble look like a joke. The size that Greg, you brought up, doesn't include the fact that any bond, especially the cream of the crop, as Bill said, has an impact on all other bonds. So
just like they said, subprime would be contained. And I believe I had you on over at CNN. And I don't know if you said this on camera, off camera. No, it's all going to be affected. It's all going to be bad. You're saying the same thing on a much larger scale. All the bonds are going to be affected, not just the 0% interest paying bonds.
Well, you all know how I feel about Ira Harris, and we were discussing this about a week ago. And his number, and if he says a number, you have to listen, is $40 billion.
Oh.
Trillion.
40 trillion.
Yeah, 40 trillion. He's including those key bonds from industrial across the board that have had their rates brought down, not reflective at all of the economic condition of the entity. You're going to be paying government to take your money. An insolvent government. How can you be so stupid? How can anybody not say that of all of the... I kind of like tulips. They look good. These things don't even look good. I mean, Draghi is not necessarily a movie star. And, the bonds are pretty much towards the top of the credit lines, and they're into the negative. What you're doing with your money is absolute insanity. That it exists is criminal. That anyone thinks that negative interest rates will have an effect of repairing an economy Just need to go back and look over 2008 to the present, where they went through the process of getting there. Oh, it was great in the camouflage department, but it wasn't solid. It wasn't the kind of recovery where the middle class job improves, where life gets better for people, where opportunity improves. It's a reflection of what the economists and decision makers are looking at, from algorithms to quants to models. We've come into a soulless environment, an environment which is without humanity. I mean, it could be the zombie apocalypse in cash that these great names are talking about. Because when you make the mistake of paying for the privilege of investing in an absolute insolvent, you are in the biggest bubble in the history of finance. And when it cuts loose, it's going to be the biggest tear in the fabric of our lives that we've ever experienced. And there's so many things happening, so many situations that are starting to unravel, become dangerous, but nothing is bigger than the absolute insanity of paying for the privilege of investing in an insolvent. That's it. That's what's going to make this something that history will talk about when our kids and our grandchildren have grandchildren. How could anybody ever have done this? That will be what they've asked.
It's funny that this 0% German Bund is coming out in Germany, and there couldn't be any more of a troubled bank than Deutsche Bank.
Exactly.
It makes Lehman Brothers look like a subsidiary in Sioux City, Iowa. I mean, it's huge. They got $70 trillion in derivatives. Is it just a coincidence that the Bund comes in at 0%, and they got one of the most troubled banks in the world, Deutsche Bank, which could be, as Bill Holter said, this could be the next Lehman Brothers candidate. Can you guys both take turns on that? Bill, let's start with you.
I think it is.
Oh, Jim, let's start with you.
Okay, I think Bill is candidacy. It is Lehman. Lehman was flushed. Well, the way everyone's attacking Deutsche Bank, Bill, do you think they're going to get flushed? I do.
I think they're getting thrown under the bus. I mean, they made
they're out of the club.
Right, exactly. They're kicked out. They said they're going to become basically state's evidence and rat out the other institutions that have been rigging markets.
HSBC, Bank of Nova Scotia.
Yeah, and
don't forget it's a crime, Bill. They're talking. You're not talking about something as simple as fiddling with a market. They're talking about a criminal act.
Right.
And that carries with it outrageous potentials. This is one of the
do you guys, either one of you guys think, and Jim, make sure you hold the mic up because everybody wants to hear what you have to say. Do you think that that Deutsche Bank, because if you look at it on a stock chart, it looks dreadful, and it looks a lot like Lehman in the year and a half leading up to its collapse. And it's there's one record low after another. It's just not regaining its. This is $100-something plus stock a year and a half ago, and it's went $15 or something. I mean, can you tell me that do you think this Lehman Brothers makes it through the year? Excuse me, Deutsche Bank makes it through the year, not Lehman Brothers. I'm sorry, Deutsche Bank. Freudian slip. Do you think Deutsche Bank can make it through the end of the year?
I don't see any way. I mean, it was only a month ago or 2 months ago that they were absolutely screaming that the banking system cannot survive with negative rates. One other thing to negative rates, and I wrote about this last week, if there are negative interest rates, then you're looking at already under and unfunded pension plans that can never perform and can never pay what they were supposed to pay. They'll never meet the promises they've made.
Oh God, they're going to get flushed. You need the pensions. This is the way to flush the pensions, is what you're saying.
Pension plans. So if they're not earning 6 or 8%, they're falling behind every year.
Well, the entity that is supposed to be the savior of all of these is the entity that, in fact, is broke. So when international investment banks, who saved nobody from anything, went down, that was terrible. But think of the entities which are supposed to be the rescuing mechanism for insolvencies, for illiquidities, you can go down the entire list, are themselves illiquid and insolvent. What does the world look like after that? Probably it looks like Mad Max in the day after.
What do you make of Draghi saying that with the Brexit? And I want to talk about your pensions. You have Cameron, the Prime Minister of Great Britain, talking. If we exit, the eurozone, if we exit the euro, everybody's pensions are at risk. I mean, he's putting out the scare tactics, and what do you make of the vitriol and then you have Draghi saying he'll bail out everything if there's a problem with the exit of the European Union from Great Britain, that he'll bail out everything. What do you make of this big fevered pitch? And can the Brexit, can the British exit from the euro wash over the whole world? Can it cause problems, or is it just hype?
Already has. I don't think it's hype. I don't think it has to exit in order for all that to continue. Just the thought of that occurring is extraordinarily serious to the idea of common currency. And Draghi doesn't have the capacity to bail everything out. He can't create money the way the Fed can create money. So his bombastic statement is just that. And what you have, Bill, I think, and Greg, is for the first time, the elites are panicking everywhere. So the statements that come out are statements coming out from upon high that the world will end if you do the following. It might work. The size of the samplings that they use to determine whether the exit will take place is 2,000 people. I'm not so sure the 2,000 people have it right. However, the thought that the union of a great part of the world historically can, in fact, be taken apart by one country makes the entire union weak. And that has its effect. So whether or not Great Britain leaves, I think the damage is done. If they leave, it's immediate. If they don't leave, with all this argumentation and with all this speculation on the result of it, they've done permanent damage.
Yeah, it's going to happen either way. I mean, there's going to be the pensions aren't going to be paid either way. So I would say that Cameron had better hope that the people vote to exit, because then he can say, see, I told you so. If you didn't vote to exit, your pensions wouldn't have been cut. But they're going to be cut anyway.
That's why he's doing that. He's doing that because he knows the pensions are going to be cut. He's going to find a scapegoat, which is, you guys did it to yourselves.
Yeah, did you notice that all the British press is now jumping up and down saying exit? So they're pushing the people, they're pushing the cattle in the corral. They're moving them in one direction, but it's the direction so they can say, see, it wasn't our fault, it was your fault.
I want to end up with gold and silver with you, both you guys, but before I get to that, I want to get with this snub that I read recently with Prince Mohammed bin Salman. He is the deputy crown prince. He is the direct, in line to the throne of Saudi Arabia. No meetings at the White House. He was supposed to come in and meet with the president, the Secretary of Defense, and also the top national security advisor, Valerie Jarrett, and nada, zippo, nothing. And what do you make? These guys are supposed to be selling oil only in dollars. What do you guys make of this little bit of a snub? Is this a small thing, or is it a big deal?
Bill?
My first thought was this is junior high school action by Washington, because if you remember, it was just a month ago, I think it was President Obama went and was not met by the king, if you recall Obama being snubbed.
That's right. I forgot about that. Yep.
So
that happened.
So here you have the reverse, but I mean, this is really playing with fire, because you're talking about the petrodollar. You're talking about the reserve currency of the world. If the prince goes back home and tomorrow or the next day or whatever, they announce, well, we cut a deal with China and we will accept yuan because we couldn't even get an audience in Washington. That's completely game over.
Jim, you brought up this thought originally with Russia doing the same thing, saying we're going to sell oil in rubles. We're not going to sell oil in dollars. And now you're talking about Saudi Arabia jumping on the bandwagon, saying, well, we're going to sell oil in, yuan or rubles or whatever.
They are doing
or
that,
whatever.
Greg. Russia is selling oil to China. They're doing it in either rubles or yuan. They're doing it in local currencies. They're not doing it in dollars. That's already happened.
And then what about the Saudi Arabia deal, Jim? How big of it is, what kind of a potential iceberg is this lurking under the water?
Well, it's throwing them directly under the bus. And it's without any relevant attention to the geopolitical conventions that exist in the Middle East. It's further than a surrender in nuclear to Iran. It's a surrender of the Saudis' position and the Saudis' influence to Iran. It isn't thought out. I'd be surprised if they even ever sat down around a table and decided, I'm with Bill. They didn't see me, I'm not going to see them. Well, in truth, that's the worst thing you can do in the world. But when have we had any decent foreign policy dealing with the Middle East in the last 2 terms? None. Never. The place is a mess. You couldn't, remember Arab Spring with all the glee when it was absolutely obvious that it was the complete reverse of what was being announced. So this process has been accelerated, and the treaty or the nuclear treaty only means that we'll have a couple more years before we start glowing in the dark. So the mess is only made more serious when childish actions are taken as reactions to what wasn't really a snub of the president, but it was sort of like, we're not really that happy to see you. This is a snub.
What could happen if Saudi Arabia does what Bill says, go home and say, we couldn't get an audience, so we're selling oil in yuan to China, and actually we're going to sell it in rupee, and we're going to sell it in euro, and we'll take dollars, but we'll take all these other currencies too. What happens at that moment?
We go back on the gold standard. With President Nixon that took us off, it was the oil standard that he put us on. Now the oil standard comes off. What do? We rush to something else. So by the vote of the populace, gold and silver are about to become extraordinarily important in the global monetary system.
Which leads me to my next question. I had somebody, I asked this question to Bill Holter, and I wanted to get your take on it too. They said, their local coin store has plenty of, gold eagles and Krugerrands and silver eagles and maple leafs and just whatever you want. And yet I hear in the bar market it's tight as heck. I mean, people like Rob Kirby, who buys tonnage for clients, says it's sorry, you can't put your hands on a ton or 5 tons. It's very difficult to basically hook that kind of a deal up. What do you say to people that say, well, I go to my coin store and there's plenty of gold and silver, and yet they keep talking about shortages? Jim, what do you say to people like that?
And two entirely different worlds. One is the world of retail, and that's retail not to the largest buyers. The other world is the world of safety being sought by the trillions in dollars that know very well that they have to protect themselves. It's been going on for a considerable period of time, and it's part of the transition taking place whereby the mechanism for determining the valuation of gold and silver will leave the...
So let me interrupt here. You're talking about a repricing, new price discovery mechanism for gold and silver. If we're off this oil standard, as you were talking about, you're talking about a new standard and new prices for, the gold, silver, stocks, bonds, interest rates. You got it, I guess, everything, right?
This fits in very much with the snubbing of the Saudis, with throwing the Saudis under the bus, with the move towards Iran, with the carloads of Middle East people that are flying in, and being taken to towns who now are told the population would double. There is a foreign policy, but not the one you want to hear. So not only do you have that process taking place to a new point of valuation, so that the person who goes into the coin store sees plenty of nickels and quarters and dimes and says, hey, everything's all right. But the trillionaires, and that's what we've got now thanks to Flushing Lehman and what we've gone through, are not dopes. They know they've got to protect their funds and have been the longest period of time, taking large physical out on a constant basis to the point now where the quote you had from the gentleman about not being able to buy very significant amount of physicals is absolutely correct. And that is part and parcel of the transition, because if you can't buy a significant amount of physical, and the new mechanism or metrics for valuating gold is physical, what do you think the price is going to be? Whatever China and whatever Russia want it to be.
There's some people out with the new, book, and it's Jim Rickards, and he's quoting a $10,000 an ounce price of gold. It could go much higher. I think he's being conservative. You have both been out with $50,000 and $50,000 price per gold. Are you backing off that prediction in terms of dollars, or can you shed a little more light on that? I'm not trying to stir up trouble or trip you up or anything like that. I know it hasn't gone up, but it has gone up some. But you just give us your thoughts on that prediction, that $50,000 gold. Of course, you didn't say it was going to be overnight either. So, but you could just give your audience and me, I'd like to find this out. Well, your prediction, $50,000 gold. Can you just give us your thoughts and update us on that?
Well, I think that Bill already has been saying we go to sleep on a Sunday night and wake up in a new financial world on a Monday, affecting all of the things that we had thought were normal, destroying all of the relationships between items that we thought were normal, destroying the entire concept of algorithms and quants, showing that the king has no clothes on, and then in fact 5 to 1 or 500 to 1 on the ratio of paper gold to physical gold is again a total illusion brought about for the purpose of holding a system together. We absolutely came off the gold standard under Nixon, and we absolutely went on the oil standard, the petrodollar. And the petrodollar lifespan is very short now. It could end tomorrow. And if you wanted to help it end tomorrow, you'd snub the Saudi Arabians. So every question that's been asked in this conference is a question of a process. And whether or not the explosion takes the form of the madness of the sovereign bonds at negative interest, it will blow up the sovereign bonds at negative interest. And that explosion will be the most powerful weapon of mass financial destruction that has ever existed in the history of man. I mean, even the Romans never got anywhere near this. And it will be written up in history. Let's hope there's somebody to write history. This is very serious, and this is why your opening question of these warnings are being made. Sure, they're talking opposition. Sure, they want to make it on the short side. However, the people who are in the most danger are the elites, okay? Because they've got the most paper. And what good is the paper in this huge worldwide global transition from make-believe to reality?
And the bonds are the asset. We've been told they're assets, like debt is money and bonds are assets. And I think not even in terms of inflation, I think what happens if your, quote, assets, which the bond market, according to my friend Greg Manarino, is orders of magnitude, the debt market bigger than the stock market, any other market out there combined, all together, the debt market is huge. What happens if these assets turn into liabilities, what they really are, and then all you have are real assets, land, cars, houses, gold, silver, artwork, diamonds. I mean, that's it, right? I mean, isn't that going to be a transition to real assets and gold and silver going to be leading the way, or do I have that wrong?
No, you've got it right, but let's be clear that the average guy listening to this doesn't stand a chance. Joe Sixpack is cannon fodder. How is he going to deal in Rembrandts? or 1,000-year-old wine or whatever? The answer is he doesn't have collector cars. He doesn't have houses. This is more serious, more socially orientated than financially orientated.
But he can't own gold and silver.
Yeah, that's why Bill and I have pushed very hard to get people's attention, not to make money for the wealthiest of our friends, but to warn the least capable of our friends they've got to do something to be able to protect themselves.
Food and water would be number 1 and 2 on the list, wouldn't it? To keep them out of the street when the credit cycle, like Bill says,
yes.
It could be overnight, over a weekend. I mean, nothing's going to work. You better have something.
Well,
am I wrong?
Nothing's going to work. You better have something is absolutely correct. We could put that up as a sign. And Bill is absolutely correct. The process has gone along so long that the process is nearing a point where it's broken, where the system is broken. And the people who will suffer the most are at both ends of the spectrum, those without and those that have more than you can conceive of. More than you can conceive of breeds a type of insanity where if you lost $100,000 and you had $100 million or $1 trillion, they got to take you to the hospital with oxygen. On the other end of the spectrum, there's no ability to fight back. If you're not ready and prepared, you have nowhere to go. You're a serf. You'll be doing what you're told.
Are you saying that $50,000 gold at that point is immaterial? It could be $500,000 gold.
Exactly.
It could be $5 million an ounce gold. At that point, does it make any difference?
Because there's no goods to be had.
Yeah, that the price of gold will be whatever China and Russia want it to be. Okay?
And Greg, to answer your question, $50,000, like you said, 50, 500, a million, whatever, you can't really put a price on it for 2 reasons. One, we really don't know how much gold the U.S. actually has. The answer is probably very close to 0. We also don't know how much more an additional money supply and debt is going to be piled into the system. So you don't have the numerator or the denominator. And that leaves you with a marketplace putting a value on the dollar. The dollar is going to be worth whatever it will buy. And
don't forget, El Capo has a big problem.
Say again, Jim?
El Capo, the drug man, has a
huge
problem.
Because he's sitting on dollars, exactly.
That's right. Well, there was reports out that they were even drug cartels were starting to trade in gold. There have been reports about that. And the war question: are they going to let it just come into a complete grinding collapse, or are they going to try to pin the nail on the war donkey and say, "Hey, look, we would have been okay, but look at this, attack, or look at this, sinking of a ship, or I don't know, look at this, somebody dropped a nuke or a suitcase bombing." Are they going to pull the war card, do you think, before they let an all-out global collapse happen?
You would suspect they would. And
yeah, I think they need to point at something.
Is when they're letting our modern tools of war fly 36 to 50 feet from a carrier or a warship, they're out of their minds. Because you could, by the flip of your pinky as a pilot, drive that right into the ship by mistake. Wars have started by mistake. They're playing games right now in the Black Sea that are insane. Snubbing the Saudi is financially nuts. What does this administration want is the question you wish to answer.
Okay, Jim Sinclair, Bill Holter. Hey, fellows, that educated me. That's like interviewing, if you're in the music world, that's like interviewing Lennon and McCartney. So I really appreciate you guys inviting me in to interview you and ask you the questions I have. I think it was super. Thank you so much for allowing me into JS Mindset and your subscribers, and also letting me post this on my site as well later. I really appreciate it.
Please do, and thank you so much for coming. Bill and I are on a mission. I don't know whether it's going to work, but we've got the energy to try.
We thank you, Craig.
Thanks for having me do this. I really appreciate it. Thanks a lot.
See you, fellas. Thanks again.